Joining us now is Ron Yovsakova of Guggenheim, who has a sell rating. Ron, I want to get your thoughts on the results we got, particularly this gross auto margin ex tax incentives that was 18.2% and better than the street had expected. We knew price cuts were going to pressure margins. What do you think about this? And is this a trough?
Absolutely, yeah. That's probably the number one question we've had with respect to the stock coming into the print. We were at 17.9, so a little better than feared is, I think, a fair characterization for the gross margins ex credits line. But still, ultimately, more than 1,300 basis points below where Tesla was in the first quarter of last year with respect to gross margins. So they're definitely feeling the impact of price cuts.
There's been quite a lot of doubt in the air since Tesla's stock price started dropping following the second quarter earnings report last month. The claim is that Tesla's price cuts earlier this year have been eating deep into the automaker's profit margin, and the long-term effect of this could be detrimental. However, we believe that despite these claims, Tesla's stock price still remains one of the most valuable stocks in the market right now. Even stock expert Tom Nash has disclosed how much Tesla stock will be worth 5 years from now, and the numbers are very interesting. So if you're investing in Tesla stock right now, be ready to get massive returns on your investment in no time.
Switching gears here and zeroing in a little bit on earnings season, which is kicking into higher gear this week. Investors eagerly awaiting results from big tech stocks. That's after the Nasdaq was dragged down by second quarter results from Tesla and Netflix last week. Tesla's recent pullback overshadows the company's beat on the top and bottom line. And it got downgraded this morning as well over at UBS. So interesting there. We're seeing those shares pull back in pre-market trading. Mark Newton is still with us, Fundstrat Global Advisors, head of technical strategy. Mark, we wanted to sort of dig into some specific names a little bit, and Great. Tesla is one of them. Obviously, it is of huge interest to people. So what's the setup look like after what we saw last week?
Well, look, Tesla has had an incredible rise. It's rallied over 100% just since the middle part of April. So it's difficult for stocks to go just in a linear direction straight up without any sort of correction. So it has gotten near-term overbought. There were some instances of the stock price moving up, but momentum has not followed of late. So that's a technical concern that sometimes means that the stock might need to consolidate. So it hit $300, and recently we've seen a little bit of backing and filling in the last week. They've downgraded today. It's down to 256. So it's getting closer to an area where investors might want to consider buying dips technically. But, you have to realize that the stock is incredibly volatile compared to many other stocks. I mean, it turned negative last year. Elon Musk sold shares back in October, November. The stock literally got cut in half. It went down to almost 100. And so now here it is at 256. So still, a very, very good rally. And if anything, on an intermediate term basis, it's actually gotten a lot more bullish for between now and 2025, I would argue. But these are just near-term concerns on the stock being downgraded. So I tend to see the stock as short-term negative, but overall on an intermediate-term basis, it's still quite attractive to me.
In the past few weeks, there's been a significant upside in Tesla stock, as the automaker's stock price recently drew close to the $300 mark after a series of bullish news from the automaker. Before now, several analysts had predicted that Tesla will have a good run in 2023, and likewise in the coming years. And this is starting to become evident, even with the profit decline that was recently recorded. Hey guys, welcome back to Tesla Tomorrow. Tom Nash is a famous YouTuber and stock expert who's been following the activities of the stock market for a while. In a previous video by the YouTuber, he broke down Gary Black's 12-month price prediction for Tesla, stating that the automaker's stock will be at a higher price over the next couple of years. At the time, the YouTuber said that Tesla will be close to being worth $1,300 in 5 years. He also seems to have taken things up a notch, and has now disclosed that Tesla could actually be worth more than this. According to him, this valuation is solely due to Tesla's growing revenue, which he predicts will reach record-breaking levels soon. So what is his new Tesla stock price forecast? Let's find out. But before we get on with it, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tom Nash disclosed that in the next 5 years, Tesla stock could be worth around $1,420.11. His recent valuation is based on Tesla's revenue, which has evidently been growing massively. Earlier this year, Tesla bull and a well-known Tesla analyst, Gary Black, predicted a $370 price target for Tesla over a 6 to 12 month period. According to the Tesla bull, there are several reasons and potential catalysts needed for Tesla to reach this price target in the stated period. Now, Tesla shares sank more than 9% after the company reported mixed results for the second quarter of this year. And following on from this, some Wall Street analysts made the case that this is just the beginning of a nightmare for Tesla. Or so they think. In fact, David Traynor, the CEO of New Constructs, said that Tesla is worth just $26 per share since the latest earnings showed deteriorating margins and waning demand. According to him, Tesla's second quarter earnings confirmed his view that its stock is one of the most overvalued in the stock market. He also gave a few points to back up his claim, and you may find them interesting. First, he warned that demand for Tesla EVs has become an issue amid rising competition and consistent inflation. According to him, Tesla has now produced more vehicles than it sold for 5 consecutive quarters, and there are still hundreds of upcoming EV models set to hit the market over the next 2 years. Tesla also argued that Tesla bulls rely on lofty estimates for the firm's full self-driving business and EV charging network in order to value the company, but these businesses are just segments, and in his opinion, they aren't material to the bottom line at the moment since about 86% of Tesla's revenue comes from selling cars. But that's not all he has to say. David Traynor believes that with price cuts weighing on margins and competition from legacy automakers heating up, Tesla's current valuation just doesn't make sense. In his own words, although Tesla is profitable, the automaker's profits are nowhere near the levels needed to justify its current valuation. As surprising as it may seem, there are still a few other analysts who share those similar thoughts about Tesla, but this is why they may be wrong. First, Tesla stock's been rising this year despite the sudden shift in overall market sentiment, with many investors now pricing in a soft landing scenario after a brutal year of Federal Reserve rate hikes. However, the truth is that this shift in market sentiment doesn't change the fact that Tesla stock fundamentals are completely disconnected from reality. Wedbush analyst Dan Ives, who is a long-time Tesla bull, recently raised his price target for Tesla from $300 to $350, citing fresh optimism about Elon Musk's golden vision for the company, including AI and charging revenue. Although Musk's net worth fell by $18 billion after Tesla shares dropped, the CEO remains the richest man in the world with about $236 billion in net profit. Even CNBC's Jim Cramer said he thinks tech giants like Netflix and Tesla will only temporarily be dinged by their stocks' drops and will eventually rebound. Cramer noted that every time these stocks swoon, the declines look so justified and reasonable that they scare people away. But because these companies have fantastic management and phenomenal products, they tend to win out over the long term despite these speed bumps. He also emphasized that Tesla's dominion could expand beyond electric vehicles and into self-driving cars, batteries, design, pickup trucks, and more. Furthermore, the company could also create another giant revenue stream by licensing its self-driving car tech to other auto companies. Now, Tesla's story, as well as that of Netflix, has also been quite similar, as both companies saw fraught earnings in the last quarter. Netflix showed positive subscriber numbers, however, the company gave a tepid forecast. Similarly, despite the fact that Elon Musk announced an exorbitant spending plan to make the company a dominant provider of full self-driving cars, investors still balked at the hefty price tag of the plan that they claim could take a long time to come to fruition. But what Jim Cramer has to say to investors is pretty simple. Netflix and Tesla are two of the greatest investments of all time, and maybe the stocks could get even lower after all that's happened. But nothing from the latest announcements makes anything different for them. But what do you think? Let us know down below, and don't forget to tell us your valuation of Tesla. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.